This is your LMAX Exchange technical update for Thursday, November 10th, 2016. Euro dollar. So it's been quite a wild session for the euro on Wednesday, with the market seeing a spike high up above 112 and 113 even, just trading up to as high as about the 113 area before pulling back sharply all the way back down towards the recent range lows in the 108.52 area. And so if we just look at closing levels and ignore this incredible spike that we saw on Wednesday, the market does look to be confined, and it still remains confined as it trades below 113.67 to a broader downtrend. At this point, a break back below 108.52 will open the door for the next major downside extension towards medium-term support, next medium-term support, which comes in around the 105 area. And right now, we really need to see a break back above 13.67 to compromise the overall bearish outlook. But we could continue to see some choppy trade while we hold above 108.52, and so it's better to sort of wait to see which way the market breaks, if it takes out 108.52 or if it continues to be confined to this broader range. Sterling dollar. With cable, it's been a more easy technical analysis with the market consolidating. It looks like it could be seeing a little bit more of a correction higher off this 31-year low down in the 120 area, but ultimately the previous base at 128 about should continue to cap rallies in favor of a continued downside. We would need to see a break back above the 128 area to take the immediate pressure off the downside. Dollar yen. So dollar yen has seen some consolidation in recent trade, but overall the market looks like it could be in the process of putting in a major base. The Polish price action on Wednesday does suggest the market could be poised for a fresh upside extension towards next key resistance at 107.50. And look at this price action that we saw on Wednesday. The market was trading significantly lower down into the 101s before reversing higher and putting in an amazing bullish outside day, consuming the previous 20 plus days of price action. So quite a bullish development, and right now it'll be interesting to see if the market can push higher off that bullish price action. Euro Swiss. So the Euro Swiss rate has been breaking down, breaking out of a range that had been defining trade for several weeks between 108 and 110. This does suggest that the market could see fresh downside towards a retest of the 2016 low at 106.24. Aussie dollar. So the Aussie dollar has recently stalled out yet again above 77. The market continues to be very well capped on rallies above 77, and this does open the door for the possibility of deeper setbacks, but we do need to see a break below key support around 74.21 to accelerate declines and signal a shift in the structure. Until then, it's just more choppy consolidation where rallies above 77 are well capped, but dips remain supported well ahead of 74.21. Dollar CAD. So dollar CAD remains constructive overall as the market continues to push higher. Right now the market is focused on extending gains towards the next key resistance area in the 135 to 140 area, but if we do see any setbacks over the coming sessions, they should be very well supported into 130. Kiwi dollar. So the New Zealand dollar continues to show signs of topping out in 2016. The latest rally was well capped up towards 74, and right now it looks like the market is putting in a lower top ahead of the next downside extension towards next key support, which comes in at 70.35. At this point, though, we would need to see a break below 70.35 to suggest that the market could see a major structural shift and bearish tilt to the downside. SPX 500. So the S&P 500 has put in an incredible bullish outside day performance on Wednesday. The market looked like it was ready to break down and immediately retest the 1990 June low before violently reversing higher and trading back towards record highs. At this point, though, if we sort of wipe out the noise, it is looking like a broader topping structure still in play as the market holds below some key resistance, internal resistance, which comes in around the 2180 area. But if we start to establish above there, we could see a retest and break of the record high, which should not be ruled out at this point. If the market, however, reverses course on Thursday and trades lower, it could suggest another topside failure and a continuation of what could be a very significant topping pattern. Gold. So gold has seen some setbacks in recent trade after a really bullish performance early Wednesday, but overall, again, the market looks to be putting in what is looks to be a higher low around the 1240 area ahead of the next major upside extension, which should see a retest and break of the 2016 peak at 1375.